What's up, everyone? It's Scotty with Money Vesting, and Tesla here doing us dirty with the margins. And I do admit I was a little bit optimistic about Tesla's ability to actually maintain margins while also lowering prices, and that did not play out because, Elon Musk, even though he did mention that their focus right now is going to be on higher volumes at lower margins, they are still pretty much mentioning that over the long term, their margins are going to once again stabilize to the upside. So that's what we're going to discuss in this video. I'm going to break down all the earnings and the revenues and everything that they're reported on the day today. And of course, the price action after hours dropping over 6%. 6% might be the understatement here because considering the earnings, considering the actual numbers here, it could have been a lot worse. It could have definitely been a lot worse. The markets were way too generous with Tesla after hours, in my personal opinion, because any other company reporting these types of numbers, and they would have gotten crushed. Anyway, so hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the binds alerts, options alerts, trade ideas, and that 16% annual discount also available till the end of this month if you want to take advantage of that. So there's only about 10 days left if you want to join. So this right here were the numbers. Earnings coming in 85 cents per share adjusted versus 85 cents expected. So in line with expectations, and revenue was slightly higher at 23.3 billion versus 23.21 billion dollars. Now, we already knew that net income and earnings were going to be down on a year-over-year basis, but to a point where it was down over 24% from last year. That's just crazy. That's just a really, really significant drawdown for earnings for a company that is, considered as a pretty significant growth company. Now, on the earnings call, CEO Elon Musk emphasized an, quote, uncertain macro environment that could impact people's car shopping plans. During a question and answer with analysts, Musk said that he expected 12 months of stormy weather in the economy. He cautioned that every time that the Federal Reserve raises interest rates, that's equivalent to an increase in the price of a car. He also said whenever there's uncertainty in the economy, people will generally postpone big new capital purchases like a new car. And that is something that I also mentioned in our other video where interest rates have gone up, right? So every time the Federal Reserve starts to raise interest rates, what happens? Interest rates on auto loans, mortgages, credit cards, everything goes up. And we have seen the auto loans go from like 4% to now sitting at 6.5%. That's a pretty significant bump here in a very short period of time, which obviously, challenges the consumer in buying a new vehicle and financing a new vehicle. He said, we've taken a view that pushing for higher volumes and larger fleet is the right choice here versus lower volume and higher margin. And over time, we will be able to generate significant profit through autonomy. So that right there is a statement which, of course, a lot of investors were looking for or waiting for, and they have chosen to lower prices with higher volumes as opposed to higher prices and higher margins for the company. So, it really, comes down to this idea of demand and supply. This is a pretty nice case study for economics, and what you'll notice is that Tesla as a brand is not in a league of its own when it comes to just the vehicles itself. At some point, they've got to find that equilibrium and where that price should be set. Because up until, I think, last year when rates were lower, and of course, consumers have had the opportunity to buy Tesla at lower monthly payments, have chosen to do so. But now that it's a little bit more on the expensive side for financing, for prices itself, consumers have receded a little bit, and as a result, Tesla's also made those changes with prices making them go down. And, obviously from 2023, since the beginning, prices have gone down 20, 23, 24% for a lot of its vehicles. So in 2023, Tesla still expects to produce 1.8 million vehicles. Musk reiterated or probably an upside volume of 2 million vehicles this year. But I feel like this is now starting to become irrelevant, right? I feel like the volume target is irrelevant because if they're going to keep lowering prices to push volume out, it doesn't matter if they do 2 million or 4 million if margins are not that great, if earnings continue to drop. You know what I mean? Like that is a real question now. Like, okay, 2 million vehicles, that's great. That's still going to grow their delivery numbers by 40, 50% year over year. But what about earnings, right? Can earnings actually grow by 20, 30, 40, 50%? Is that still the plan? Because look, I'm trying to be as unbiased and as objective as possible, right? If anybody's out there telling you that Tesla reported fantastic numbers, they're probably lying to themselves, because we got to be as rational here as possible. And the numbers were not that great. They were okay, I guess. And this right here is the entire spreadsheet that I want to go over. And if you take a look at the total automotive revenues, 19.9 billion, which is good. Not gonna lie, that's good because of the higher volumes. That's 18% growth on a year-over-year basis. And then if you take a look at total revenues, that was up 24% once you account for energy generation and storage revenue and services and other revenues as well, which was up like 44%, 140%. So top line revenues, fantastic, right? 24% growth year over year to 23.3 billion. But then if you come over to gross profit, right, that's down 17% year over year. And take a look at these margins here, a full 10% decline, a full 10% on a year over year basis, and a full 4% decline on a quarter over quarter basis. So, I mean, the trend you can see 29%, 25, 25, 23, and now under 20 for gross profit. So that's a full 977 basis point decline. That's a big concern here. If you come over to operating expenses, that's pretty flat on a year-over-year basis, only down 1%. And operating income is down 26% on a year-over-year basis. A couple things that I also want to highlight here is gross profit going down, operating income going down 17%, 26%, and the operating margins going from 19.2% all the way down to 11.4%. That's another almost 8% decline in operating margins. This right here is going to be their EBITDA margins, another 8% decline, and EBITDA is down over 15% on a year-over-year basis. Then we come over to net income margin down from 19.9, almost 20% net income margin down to 12.5. Like, sheesh, that is insanely low, like compared to where we were last year. So yeah, I mean, I most certainly did overestimate Tesla and Elon Musk's ability and their vision to keep margins steady, even though we did see costs coming down. But net income margin, 12.5%. It's down 736 basis points, or 7.36%. And this right here is how much net income's down on a year-over-year basis, 24% from same time last year. Now, if you take a look at the EPS, that's down 21%. So if you take a look at the trailing 12 months of earnings per share, now we're going to drop off that $1.07 and we're going to add back 85 cents. You've got a valuation that's increasing, folks. You've got a valuation that's actually gone up, because if you do the same math here and took this number, up until, let's just do this, 169, up until this quarter, the valuation on a trailing basis was 41. Right? And now after we drop off $1.07 and we account for 85 cents, that's the EPS non-GAAP basis, the valuation spiked to 44, right? On a trailing basis, and most likely will be on a forward basis too, because Tesla is not expected to grow this year in terms of earnings. So that's where we are. 43.9, 44 is the number. And right now, we've got free cash flows significantly down 80% on a year-over-year basis, coming down to 441 million. Cash and cash equivalents at 22.4 billion. So that's good. That still increased 24% year-over-year. So cash was good. Balance sheet is still fantastic. Revenue is still good. I mean, there's still demand. They're still delivering, but not at the same margins. That's the story that's changed a little bit. Now, look, I'm not bashing on Tesla here. Like, I've got Tesla's one of my biggest positions, right? So I'm actually long on Tesla, bullish on Tesla, want Tesla to do well over the long term. But we also can't ignore some of the more fact-based analysis, some of the more actual numbers and data-driven analysis, because at the end of the day, that's what we have to focus on. So revenue grew 24%. Because of growth in vehicle deliveries, growth in other parts of the business, and including average selling price, reduced average selling price year over year, excluding foreign exchange impact, and negative foreign exchange impact of 0.8 billion. Profitability here, we got growth in vehicle deliveries, gross profit growth in energy business, as well as services and other. Reduced ASP year over year. We got higher raw material, commodity, logistics prices. I thought this was going to be a little bit of a plus point, right? So, I mean, higher raw material, like, from all the analysis that we did, I mean, raw material prices, commodity prices, they were down in the first quarter of 23. But for some reason, I think they're still apparently a little bit higher. Maybe there's a lag effect. Maybe they've already got contracts in place at specific prices. So who knows? But cost of production, ramp of 4680 cells, battery cells, and lower credit revenue. These were some of the negatives from profitability. And some of the positives were obviously growth in vehicles. So, for me, I don't really care too much about the actual delivery value there, because I mean, Tesla can do 1.8 million, 2 million. They can even do 3 million if they wanted to, right? They can drop prices, but it's not gonna change the fact that earnings are not expected to grow for this year, unfortunately. So outlook wise, we are planning to grow production as quickly as possible in alignment with the 50% CAGR target we began guiding in early 2021. In some years we may grow faster, some years we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of the long-term growth rate of 50%, with around 1.8 million cars for the year. What really needs to happen is that Elon Musk needs to come out and say that we're putting a stop to these price cuts, because unless he says that, there is going to be that problem of consumers continue to expect prices to be lower, and they delay their purchase, they postpone their purchase, and in that scenario both the demand and the prices fall off. So this has been the declines in the 4 models since the beginning of 2023. I don't think it's accounting for the more recent price drops in Model Y and Model 3, but of course we have seen prices come down pretty substantially, and that's obviously hurting the margins for the company right now. So Tesla here on the day after hours dropping over 6%. Like I said, I think the market is doing justice with Tesla to not drop it even further. They're being generous right now, in my opinion, because an earnings decline, operating gross profit, net income, everything declining the way it did, this could have been much worse. So 165, 167 is going to be that level to watch for Tesla, and I'll be paying attention to some of the premiums tomorrow for cash secured puts. But right now we're inside this green rectangle, so we'll see if there's any buyers that step in at these prices. But 166 is going to be that support. We've got a gap to fill down here, 146 to 156, all the way down to a support in the 130. That's also in line with my fair value for Tesla. So hope you guys enjoyed this video and a quick update on Tesla earnings. Let me know your thoughts down in the comment section below. Overall, I would give Tesla earnings here like a 4 out of 10, because yeah, it was not that great. Revenue still grew, balance sheet still phenomenal. They're still guiding for good demand, and 1.8 million vehicles and 50% compounded annual growth rate. But then the things that actually do matter when it comes to profitability and earnings was starting to weaken out a little bit. So let me know your thoughts down in the comment section below. As always, happy investing. Make sure you drop a like, subscribe, and the link to our Discord and Patreon is going to be down below if you're interested in joining us and getting that 16% annual discount until the end of this month. As always, happy investing. I'll see you all in the next video.